Another tech titan set to report next week would be Apple. Last month, Tony laid out a way to play the name for a bounce, but with results due on Thursday, he sees these Granny Smith gains could be coming to an end. So, Tony, how are you playing it now?
Yeah, that's exactly right. I was long this name for the past month or so, but I think it's now time to fade this strength going into earnings next week. If we look at a chart here of Apple, we see this slow and steady uptrend that it's been in over the past couple of years. But what we have seen recently is a breakdown of that trend. And now we've come back to retest that trend line. And the risk to reward simply favors to the downside going into the earnings event. And you can draw these charts different ways. If you look at it another way, you can draw a head and shoulders top formation. But both the charts, what they point us towards is further downside going into earnings. Now, if you look at the business, one of the things that I've noted is that Apple right now is a relatively slow growing business. If you look at EPS and revenue growth, we're looking at single digits over the next couple of years. And I think the stock trading at about nearly 24 times next year's earnings is a pretty rich multiple to where the S&P is currently trading right now. So I think that you might also see some multiple contraction if we start to see some guidance that is a little bit unfavorable for the rest of the year. And the market largely has shrugged off the news that we saw earlier this week or last week where they were planning, and many of the tech firms planning on slowing down hiring. That I don't think is reflected in the stock price yet. So when we look at the options market right now, Apple is implying about a 5% move here going into earnings versus the 4.1% we've seen over the last 8 quarters. So options premiums are elevated, so I'm going to favor selling premium, and I'm going out to the August 26th expiration. I'm looking at selling the 155 call option, which is the at-the-money call, and I'm buying a 165 call against it. Here I'm going to collect about $4.07 earlier today. That's more than 40% of the vertical width, and this is a strategy that will be profitable if Apple moves lower on earnings or if it just simply stays where it is. And I think there's limited upside going into earnings given the strength we've seen over the last month.
So, Carter, what does Apple's chart look like?
Well, you saw some great lines there. Let's put them back up on the screen if we can. You have two well-defined circumstances, and Tony drew them. You can call it a head and shoulders top, and that's, of course, what it is, because we saw that in the QQQ. This has a big correlation with that aggregate. And then we see, of course, a stock that bounces to the penny off a trend line and then breaks trend. And as a good rule of thumb, if you throw back to the level from which you broke, it's defined as a rally to a difficult level. Yeah, right to the kill zone, and I would go after it.